Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live. Chat is open on both YouTube and on X, so feel free to drop any comments, questions, stocks you want us to look at. Like I said, chat is open. We'll be breaking down the overall market direction, leading themes, industry groups. We'll look at some charts, talk about a bunch of other stuff to get everybody ready to trade for next week. Rough, volatile market this week. So without further ado, let's break it all down, and it's time for the rapid review. All right. As you guys know, educational, informational purposes only, not in an investment, financial, or trading advice. All right, market direction. As I'm looking at, we are in an uptrend under pressure. Distribution days, we started the week off 5 and 7, ended the week off 5 and 7. So we jump over and look at our distribution day tracker. As you can see, we gained distribution both on Tuesday and on Wednesday on the S&P, and we gained distribution Tuesday and Wednesday on the NASDAQ as well, both of them down on heavy volume. In terms of days that were lost, the S&P lost the 1229 and the 1231 distribution days due to time, and the NASDAQ lost the 1229, 1230 distribution days due to time. I always state this, my distribution days might look slightly different than IBDs. Most of the time it is due to what the volume was showing on the chart, but overall you get an idea of what's going on. The big thing is we're starting to see some selling clustering into the market. Specifically, if we're looking really at what went on with the NASDAQ, we have 1, 2, 3, 4, 5 distribution days clustered up in 2 trading weeks. That is a lot of distribution. We have 3 distribution days on the S&P, but really on the NASDAQ, seeing a ton of clustering of distribution, which is not a positive sign. Looking at the current state of the market for the week, the S&P was down 0.1%, NASDAQ down 0.184%, and the Dow up 2.50%, hitting all-time highs, which leads us to 2026, first month of January in the books. The S&P, this is though for current date, year to date, the S&P is up 1.27%, NASDAQ down for the year 0.91%, and the Dow leading out the year 4.27%. So, a lot of the times when we have these stronger bull markets, you're going to see the NASDAQ leading, S&P in second, Dow in last. Completely reverse that with the Dow leading things out. What is going on, Chad? Moving averages. So the S&P had started off the week where it was below the 10-day simple moving average, but above the 2150 and 200. The NASDAQ had started off the week above all moving averages. As you can see, the S&P closed basically right at the 10-day simple moving average and above all others. The NASDAQ, however, closing down below the 10, the 21, and the 50-day simple moving average, and a ways away from the 50-day simple moving average, so not good to see that. The other thing that we are seeing is that we have seen now the 21, the 10-day also crossing below the 50-day simple moving average. Not a good sign. For those that look at the power trend, when we see that 21 cross below the 50, that is what is turning off that power trend, and we have had that occur. So let's jump over and let's take a look at what went on with the indexes. So we'll start off as we always do with the NASDAQ. We have been talking about this for a while. We've been in this sideways action on the NASDAQ since the 29th of October. And we've basically chopped around. We saw volatility did start to decrease. Just a little recap for everybody. Things kind of really tightened up, and things looked really, really positive for a while. And then we kind of started seeing that volatility pick up in the middle of January. We had what we thought might have been a little bit of a shakeout, because as we pulled back, we then rallied really, really strong, but on lighter volume, but straight up right to those all-time highs. And right at those all-time highs, we met resistance, which was not was somewhat expected, given that we had run up so quickly. But what was then another pullback, looking like we were finding support at that 50-day. And that's where we kind of started off this week, was finding support at that 50-day simple moving average, finding a way above, back above the 10 and the 21, and starting off the week looking somewhat positive in terms of, continuing to make those higher lows and working our way, hopefully, to find our way to break out of this sideways action. Tuesday basically rained on our parade. We saw that we gapped up in the morning and then just completely rolled over intraday. Ended up rallying to close above the 129 low. But needless to say, we had a ton of volume pouring in, which gave us that distribution day. We had closed below all the 10, 21, and the 50-day simple moving average. Wednesday, we saw that weakness continue. As you can see, we rolled over, pulled all the way down to the December 17th low, found support, and rallied. And this is where people always, oh, what are these, technical analysis, for anybody who doesn't follow technical analysis. Look, there's clearly, we've seen in multiple areas, the fact that on Tuesday, we rallied and closed right at that prior low right here, short-term prior low. Then here, we found clear support right at this low over here. Like, technical analysis works, right? People are looking at these levels and algorithms and whatnot. So there was definitely some clear support there. But then we had Thursday, gap down even further, breaking below this low. And then on Friday, and this is what kind of threw everybody, I think, a little bit off just from hearing what a lot of people in the community was saying. Then we had a strong Friday, and we actually were able to close up 2.18% for the day. Really, really strong move upwards, and then back above that 120 and the 1217 low. The big thing that stands out to me is that volume was extremely light. We actually had a slightly below average volume on Friday, and having a ton of selling coming in on that downtrend. Seeing this action, this one strong day, does not really excite me at all. It's just more volatility and could just be a dead cat bounce. We will find out, but the big thing for me that stands out is the fact that we did not have a lot of volume in that rebound, and there was clearly much more volume towards the downside. We're still below the 50. Like I had mentioned, we crossed the 10 and the 21 below the 50, which is another negative sign to see that. And we're still sitting in this sideways choppy action. All of these things considered, right? This is just not the type of market that I really want to be messing around with. As a trader, as a trend follower, we do not need to be investing in every single market. There will always be some sort of a name or some sort of a stock that's going to want to grab our attention, and we might say, oh, look at this setup. This might work. But looking at the overall market and looking at the general consensus of how stocks are acting is going to help us tilt that table in our favor, give us the higher probability of our trades working out. And with everything that's going on right now, this is just not the environment that I want to be trading in. The choppiness and the fact that we have this ton of selling in, we're below the 50, the 10 to the 21 crossing below the 50, all real negative signals. The no longer creating those higher lows and now making what is a lower low, as this low right here had taken out, like I said, all three of these levels. And this is a reason why I like putting these on my charts, giving me these areas to pay attention to. And really right now, the only thing that I'm really keeping an eye on is this prior low from the February 5th and the prior low from November 21st. Those are the two lows that I'm keeping an eye on. Could this be just a shakeout, I guess? And then could we rally and make our way to all-time highs and this market can resume? Absolutely. Could we sit and chop around sideways and just continue to just be just not a great environment? 100%. Or could this be it? Could this be a dead cat bounce and could we completely roll over? Yes. But our job is not to predict. Our job is to just look at the environment that we're in and adjust our trading based on that. If this market is going to resume, it will give us signals that is going to resume. We will see more follow through. We will see some volume pour in. And in the grand scheme of things, we'll see us make new highs, hold those new highs, and continue to climb higher. High. Keep saying high. But yes, so overall, right, this is just not the type of environment that we want to be in. This is more of a wait and see type of environment on the NASDAQ. Now, key levels. I mentioned on the downside. On the upside, really, it's just I'm just keeping an eye on those all-time highs and that 50-day simple moving average. Those, I think, are the two most important levels that we're looking at right now. And then let's just take a look at the weekly so people can see what the weekly looks like. But here we have it again, right? Down below that 10-week moving average. Not good. And we have definitely a ton of volume coming in, or volume compared to these days. Not above average for the week, but still a lot of volume. This is much more the environment we want to be trading in, right? Not this. So let's look at the S&P, because a couple of people in the social media realm, specifically over on Reddit, had mentioned, well, the S&P is right below all-time highs, and the S&P is basically at the 10-day and above the 21, above the 50. So, you know, why am I going to sit out of this market? Well, the NASDAQ and just the overall environment, we had mentioned that. But looking at what's going on in the S&P, yes, the S&P has been much stronger, 100%. We've been talking about this every week. We've been much more focused at bouncing around those all-time highs versus in that kind of sideways choppy action. Yes, we did rebound and get back above those moving averages. But again, there was a lot of selling coming in on the downside, and that rebound has been on lower volume. And we really are at that 10-day simple moving average, basically right at that resistance. Yes, we are above this area, but we're still off those all-time highs. So maybe, yes, the overall trend, right? We're looking at, oops, not where I wanted to click. Let me grab that again. Right, that's good enough. Someone could draw lines wherever it is that they want to draw these lines and say, look, oh, well, we're still trending up, right? Overall, this trend is higher. But the difference is we're spending a lot more time below the 50. We're breaking below the 50 many, many more times, and we're seeing much more resistance at those high levels. So if this market is going to prove itself, it will. We'll see some follow through. We'll see ourselves get to all-time highs, and there'll be plenty of opportunity to buy stocks. So, yes, the S&P is looking much stronger, but still not where I want to be in terms of the environment to be trading in. Dow, on the other hand, look, the Dow looks healthy, right? The Dow is just continuing to trend upwards, make higher highs, higher lows, hold itself above that 50-day simple moving average. So the Dow looks much healthier. Could this be a signal that we're seeing sector rotation? Absolutely. But still, this is, when the Dow is outperforming, that tends not to be the stocks that most of us traders in this trend following, CANSLIM, whatever type of style you want to, swing trader style, tend to trade. We'll look at the Russell real quick. Russell found support at the 50, so the small caps did find support at the 50. But still, like I said, this overall environment is definitely not a area type of environment I want to be trading. And I know I keep saying that, but I think I need to reiterate that, because I know a lot of people, and I did it myself, tend to overtrade in these type of environments. They tend to get a death by 1,000 cuts, and then they look back on it and they think, if I just sat out and waited for things to just be more in my favor, I would have had a much better year. And that's one of those things I just want to make sure I really, really hammer home this week. Because I have it, let's look at Bitcoin. Ooh, rough. Bitcoin completely rolling over. And this is why we trend follow, right? Because what do we have? 126,000 down all the way to, we're only at 69,256 right now. This is why we trend follow, guys. This is why we trend follow. All right, so not much else to add over on the indexes. Hey, what's going on, Ken? Let's now jump over to Deepvue. There we go. All right, and let's look at the theme tracker. So one of the things that was brought up, Chad, I know you're in here right now, and you had mentioned this over at Discord, was talking about sector rotation. Are we getting sector rotation? And I think this is a term that people love to throw: sector rotation, rotation, rotation. They love to throw it around. 1 week does not make rotation, right? The same way one down week does not make a change in a trend. The same way one up week doesn't make the change in a trend, whether it's for the market or for the stocks. What I will say is there is definitely, we are seeing what appears to be a switch where we were seeing a lot of the AI growth names that were performing well, and then now we're starting to see some more defensive names starting to do a little bit better this week. Now, whether that carries on into the next week and we continue to see that is really where the question comes in. But it's something that we need to monitor. So looking at the week, the airlines, transportation, banks, oil, gas, construction, industrials, materials, real estate, retail, steel, healthcare. In terms of the stocks that we've been watching that didn't get annihilated, solar is one of those, biotech is one of those, and healthcare one of those. Those are a couple groups that I've really been watching, and they tended to do a little better. Bitcoin miners got annihilated. Gold, silver got annihilated. So it definitely looks like for this week we saw some rotation. Now, whether that continues to carry over, that's what we want to keep an eye on. Oil and gas on the 1 month time frame. This is something that we've been seeing some strength in. Solar continues. Home construction. Silver miners still on the 1 month time frame, looking decent. We'll look at the ETFs a little bit, and then the 3 month time frame. You can see that hasn't obviously changed that much from week to week. But really, what I'm looking at on this screen is when I start seeing things from here push their way up here, which will in turn push their way up here, and then obviously for the year to date, push their way up. So definitely appears that we are starting to see some rotation. We need to sit back and see if that continues, just like we'd look to see if any trend continues. Let's look over on the ETF tracker of the list of ETFs that I kind of created. I got the daily over here, the weekly over here. And let's do it on a 1 week basis. Let's clear this out. So this is comparing these ETFs to the S&P, and airlines. Really strong week for airlines, as you can see there. I am not able to trade this due to my job, so I don't pay much attention to, but you guys can see that on there. Home builders, we just saw that. Home builders showing some strength. Definitely looking like it is in kind of a basing pattern right here when you're looking at the weekly, possibly starting a new uptrend. So could be something to keep an eye on. But again, I'm more just being patient in this type of environment. Transportation has been showing some strength over the last couple of weeks as it continues to make all-time highs. Mexico. Let's see. Regional banks have been showing strength. Infrastructure showing strength. Solar. So solar is definitely showing strength. Yes, when you zoom out on the weekly, there is a lot of upside resistance, but this is a clear uptrend. We got the 10 and the 40 week both trending up. All moving average on the daily time frame trending up. We've short term, if you're looking at the daily, making new highs, which is really positive. Tons of volume coming in on the upside as we're starting to make those all-time highs. So this solar really does look strong. And it's probably one of the few groups that I've actually still paid attention to and been tempted to possibly take a trade, despite the overall environment. And this would be one of those groups that I continue to highlight as being a group to be paying attention to. Oil refineries, all-time high, or not necessarily all-time highs, right? But actually, yeah, all-time highs on that. Banks, oil. What else? Infrastructure. So a lot of the stuff that we were seeing, food and beverage has been ripping since the beginning of the year. Steel, cargo. So now we're basically seeing, well, these groups, as we start to get, here we go, into the 80s, gold miners. Let's look at gold miners real quick. So gold miners have pulled back and found some support at the 50, possibly maybe forming a base. Silver miners, same thing. So not completely out. I wouldn't completely disregard those mining in general. Yes, had a bad week, but the overall trend is up. So still keep an eye on those groups. They might be forming bases. And there's gold again. That's IWM, Russia's insurance. Insurance looking like it's possibly working its way out of this consolidation. Keep an eye on that. And that is about all I think we need to really go through. Oh, and lithium battery also looks like forming a base. So I think the key thing here, right, is don't completely disregard, excuse me, some of these groups that have performed well. As you can see, gold miners, silver miners, lithium. Some of these groups have actually found support to 50 and looking like they're just taking a break from this really strong uptrend that they have had. And hopefully will form some basing patterns and give us an opportunity to get in if that trend is to continue. And then seeing a lot more of these defensive plays having a little more strength this week, and many of them working towards what could possibly be a new high. It does appear that we might be turning into a more defensive type of environment where those defensive stocks tend to be doing a little bit better. And then some of these others might be taking a little bit of a break. But time will tell. Just something that we want to keep monitoring every single week. Ken, SEDG and Run are starting to do well in solar. Yes, I'll bring up my spotlight list and you'll see that it is mostly solar names. All right, so exposure levels. I personally am fully in cash right now. I was lucky enough to take some profits in a decent amount of the names that I had owned. Got stopped out or saw weakness in some names and just cut them because of the weakness in the market, and knowing that if they were to continue to show strength, I could always get back in. But I'm fully in cash right now. And I'm very hesitant, like I've been saying, to make new buys. I rather sit back, be patient, let the environment improve itself, let things be a little more clear, a little less choppy, and then use that environment to make gains versus then fight an uphill battle in the current market that we are in. If you have names that are still holding up and still performing well, and especially if you're maybe a longer term position trader, there's nothing wrong with having exposure in this market if those names have not hit any of your stops and are behaving properly. I think the big thing in this environment is, again, be hesitant with new buys, making sure you're clearing out the laggards, not holding on to junk, and preserving both your actual financial capital as well as your mental capital in these type of environments. I would also not want to be heavily invested in this market. So for me, I think if you're somewhere between the 0 to 30, maybe even 40% range of investment in this type of market, you could probably get away with it depending on your type of strategy. But again, I'm fully in cash and very, very, very hesitant and selective to make new buys unless something looks absolutely perfect and an industry group that is showing tons and tons of relative strength. So being very, very, very selective. All right. Let's jump back over to Deepvue now. We got some names. Oh, here we go. All right, so Spotlight. These are the names that I have on here. Stuff in the solar space. NXT was very, very tempting to take a position on. But it was just a little too far extended off of this low where I just didn't want to place too big of a stop. I also was kind of looking and waiting towards the end of that day because I didn't want to just see this be like a real true intraday dead count bounce where we had a big up day and then just completely rolled over and got stopped out right away. So was definitely a little more patient. It has not really broken this downtrend, right? Oops. Well, that's still a good line to put on there. It has not got above that Wednesday high. So I'm hoping this kind of just continues to pull back and tighten up. But it could just completely go on without me. And the volume wasn't that great on Friday, so it wasn't one of those names where I'm like, oh my God, I have to buy, or rather just kind of sit back and wait. But this name in particular is a name that I am really, really closely watching. Ken, you had also mentioned Run. Run for me is just a little more choppy. Oops. It's just one of those names that's just been a little more choppy and sideways, where NXT looking a little bit more uniform, a little bit more of the type of setup that I prefer to take. And then you had also mentioned SEDG. Yeah, same thing. Forming that basing pattern, definitely showing some relative strength on this name. So keeping an eye on it. Earnings coming up on the 18th. I'm actually going to pop this onto that list. BE, another one of those names that looks like it's kind of showing some overall relative strength. So definitely keeping an eye on that name as well. Over on Discord, we had some asks of, hold on one second. So Kobe had a list of names that he wanted to bring up. So let's get those. Let's look at A. And if you're watching, feel free to throw some names in the chat. Ken, yes. Enphase, definitely another big player in the solar space. And like I said, solar really being the one big group that I am really, really watching. Semis, so we have Advanced Energy Industries. Fundamentals on this one. Overall, the annual not looking amazing, but definitely seeing strength on the quarterly. Definitely seeing some slight increase in fund ownership. 1 month absolute strength looking really good. Good ROE. So this name overall I think looks pretty healthy. It is in a clear uptrend. We are seeing some resistance at those all-time highs. Thing that I see right here, let's see. We're pretty far from this prior low. Somebody may be willing to take this as it breaks to an all-time high. I just don't think this is enough time, enough sideways action, enough consolidation for me to be willing to take a position on this. To me, this is more of an extended type of name that I want to see really create more of a basing pattern. You also have earnings, which will be on the 10th, which is, what's that, Tuesday? Tomorrow's 8th, 9th. Yep, 10th. That's Tuesday. So you'll also have earnings coming out after market close on Tuesday. So I definitely don't want to be taking anything on this. Next up, Kobe X'd for Primoris Services Corporation. Fundamentals. Look, you guys can see the fundamentals on the screen. So I'm not going to go sit through everything on here and nitpick and spend a ton of time with that. Let's just look at really what's going on the chart. Broke out to all-time highs, which is definitely a positive thing to see. Again, very, very extended from those prior lows. I guess if you wanted to look at just the 21, which to me, if I'm going to use one of these moving averages, I don't just blanketly use a moving average like, oh, I just put my stop at the 21 day. Like I want to see, is the stock tend to respect that moving average? And right now, there's no definitive respect of that moving average. So not really where I'd want to place my stop. So to me, this is just a little far off. Good that it's making its way to all-time highs, but nothing that's screaming at me like this is a name that I really want to be in. Also seeing the volatility pick up this week right around that area too. So something I would sit out on, but I could see definitely relative strength on this name given what's been going on in the market. So I could see people wanting to keep an eye on this. POWL, Powell Industries. Extended, really, really strong. If you're in this name, it looks great. Looks really, really good. Yeah, I mean, this name is completely just skyrocketed in basically the beginning of this year. So extended, but if you're in it, good, great. And then ALGM, Allegro Microsystems. This broke out to all-time highs. This one's extended as well. Really, really, I mean, looks great on the earnings side on a quarterly basis. Sales look pretty decent too. Obviously, absolute strength looks really, really strong, but this has broken out and is now very, very extended, sitting well over 7%, 8% above that 5-day simple moving average. So extended on this name as well. Fensukasa, STRL. All right. So with this one, right, we're in that construction space that we've seen definitely some relative strength in. Clearly in a nice spacing pattern over here. Tons of volume coming in as we bounced off of that 50-day simple moving average, coming up towards those all-time highs. Yeah, this is a name that I think is very, very strong, worth watching right now. What I would like to see is, again, some sort of tightness up at those all-time highs to give me a good place to put my stop. Because right now we're starting to get pretty extended as we're starting to approach those all-time highs. So I'd expect this to have some sort of pause and some sort of rest right at those all-time highs. You don't always get that. But overall, I think this name looking very, very strong. It's in a group that's looking strong. It's had a really strong prior uptrend. It's built a pretty nice base going back from November. The depth on that base, let's just give a quick, not too deep, below 35, 34% from peak to trough on that base. So this I like this name. This definitely looks good. And if we're seeing this sector rotation, this could be a group that continues to lead. So good call on that one for sure. All right. Other than that, I'll bring up these two names just because I don't own any of these names anymore. So I got to clean this up. But SanDisk. A lot of people know that I had owned this. I did end up selling at a break below the 5-day simple moving average, taking those profits just given the overall environment, and not willing to ride this to the 21, which would have been at the time when I sold something like a 30% correction. Just didn't feel like giving all that back. So took profits. And I think that if this is going to give us another chance to get in, great. If not, oh well. But I got a good amount of juice out of this one, so I was happy with that. It all depends on your trading style. Somebody who's a longer-term trader may be much more willing to hold this for a longer period of time and be willing to give back a little bit more in the eyes of seeing this go on for a longer uptrend. For me, especially in this environment, I rather just take those profits, sit out, and be patient. And then MU. So it's another one of those names that have been leading. So MU really kind of hovering right around that 21 EMA. We did close below it on Wednesday, but it seems like it's finding that way to constantly close after that above that 21 EMA. This is another one of those names that's been very, very strong. So hopefully these are two names that personally I'm hoping give us another basing pattern, as well as not that one. Oh, which one am I looking at? This one's completely just I missed, but this gave us another basing pattern. So this is kind of what I'm using as an example, as we were able to rally and then kind of form a base and then give another opportunity to enter. So this is actually given multiple chances, 1, 2 chances to get in on this one. And that's kind of what I'm hoping for. Oops. With MU. And if SNDK can kind of do. All right. Other than that, nobody has put any names out there to really look at. So just final thoughts. Again, there's nothing wrong with sitting on your hands and being patient in this market. It's, I think, a much better option than death by 1,000 cuts and really damaging your mental capital. If you look at the great professional traders, they know when they should be trading and they know when they should be sitting out. And sometimes sitting out means that things will go on without you, but that's completely fine. You want to be in an environment that has higher probabilities of success, which I don't see this as that type of environment. What you should be doing is two things. You should be looking at the industries and the themes, seeing what's showing relative strength, keeping an eye on those, looking at some of these prior leaders like a SanDisk and MU and seeing if they're going to give us an opportunity to get back in, and what is showing relative strength, and keeping an eye on that. Because if we do go into a correction specifically, it becomes a lot easier to see the names that could be the possible leaders. So I welcome a correction. I kind of hope for a correction. It just makes this so much easier for us. It gives us what we saw last year from basically April to end of September, where it's very easy to make money in the market. So I welcome a nice correction. I welcome clearing some things up and giving us a better environment to really hammer and make some money in this market. So other than that, yeah, just continue to do work, continue to be disciplined. It can get boring if this market really does roll over. I understand. If shorting is not in your repertoire, do not just on a whim try shorting. If you haven't studied it, if you haven't looked at charts, if you don't have a real, true, systematic way of shorting, you're better off just sitting patiently and preserving that capital. I promise you. I promise you. If you have a way to short, then by all means, it's a good tool to have in your bucket if we do go into a correction. But yeah, just something else I wanted to throw out there. Now, by no means am I saying we are going into a correction. I am just saying that we're in this type of market situation right now where a correction is very, very possible and in the cards. And if that does happen, these are things that I just wanted to remind people of. So that's it. That's all I got. For those of you who don't know, Waypoint is up and active. And well, let's do this real quick. Fensukasa wants to look at CLS. Kind of just sloppy on this one. I've watched this name for a while right now. I like the fundamentals on this. Yeah, this is just a little sloppy for me. And the really, really low absolute strength. So nothing I'm very interested in. All right. Real quick though, let's go back over to Waypoint. So this is up. This is running. I am having people all able to sign up. The feedback I've gotten personally has been really, really good. So I'm actually happy to hear that from a lot of people, because this was something that was really born from just 8 years of headache in my own journaling, post-analysis, kind of keeping a good tab on all of my metrics and managing my risk. This I've showed you guys many times. But just to give you a quick rundown, this dashboard is where you're going to look at all different trading metrics. Your risk manager is where you are going to be, and this kind of is all over the place right now, but this is like a test account. This is going to be where you're going to be able to look at your current open risk in the market and plan your trades as well. Then here you have your trade log, where all your trades will be logged and also grouped. So multiple buys, multiple sells will all be tied together, and it'll show you not only the P&L on each position, like individual transaction, but also the overall campaign, as I call it. Your trade debrief is here for quick post-analysis. Everything that you've documented throughout the trading of this campaign will all show up in here, screenshots, everything, and then you can give it a quick read, and then you can track what you did right, what you did wrong. These are all custom, and then you can also do a just kind of notes area. There's also voice in here. You have a market outlook that also has voice, so you can kind of keep track of how you look at the overall market. And then your mindset journal, same thing, voice and quick personalized custom tags as well. And that's all tied in with an AI, which has the ability to look in your settings at your default risk settings, your trading strategy, the traders that you try to emulate, and your trading rules to give you good analysis on all of this data. So the goal of this was really to just make this quick, easy, something that, and here's, like I said, all these custom tags. You could document everything very, very quickly. It'll keep track and calculate everything for you. And then you can use the power of AI, because AI has just been ridiculous in the last couple of years, to make sense of all that stuff. Because I know me personally, I used to journal a lot and I'd have all these notes. And now I had to go manually read through all these notes, highlight stuff, see the correlation between what I was doing in my trading, what I was doing right, what I was doing wrong, and my notes, and then come up with ways to make improvements. The whole purpose of that AI is to do all that for you, because let's be honest, what happens to most of us, we end up making all these notes and then it just sits there and nothing really gets done. So Brian, missed a majority of this meeting, but I will watch it back anytime. Yeah, Brian, that's why it's recorded. That's why it's there for everybody to go back and look at. But I'm still running with Waypoint, still running a lifetime subscription for everybody who's the first kind of adopters of the tool. And if you're interested, there is also a discounted lifetime subscription, which is going to be ending within the next week or two. Reach out to me. You guys know where to find me, and I'll get you that code so you can get a discounted lifetime membership. If you could only, okay, let's see. Thanks for your time. If you could only use one paid service for your analysis, which would you choose? Currently, you are only using free services and are considered investing. Oh, I am only using, okay. So I use Deepvue. I think for the price, you get so much out of this tool. It gives me everything that I need personally. It gives me my fundamentals, it gives me my technicals, and then it gives me everything to look at the market from top down, from the themes and ETFs and industry groups. This, for me, is the best tool out there, especially for the price. There are other tools out there. And I think part of it also depends on maybe your trading style, on what you like. And for me, though, it's Deepvue. That's for the price. There's discounts. You can get it for under $50 a month. If you pay for the annual, it's cheaper than that. And I have a code for the annual in my in the YouTube link, because I know you're on YouTube, so you could click that, and it's just, for what you get out of the tool, it is by far best bang for your buck for me personally. Other than that, paid services, obviously, I think Waypoint's amazing. I think it's one of those things that as people get more of a professional style, treating their trading like a business, you need to have an understanding of your trading. You need to really have a good grasp on your risk management. You need to be doing debriefs, and you need to be, journaling and documenting everything. And then that was what this tool is for me. It's a way to do all of that annoying bookwork, annoying documentation that separates the amateur trader from more professional trader. But with that, like I said, you can do right now, I'm still running that one-time lifetime access. So you pay for it once, you have the tool for life, and now you don't have to worry about any kind of monthly subscription. But again, that is going to go away. This is going to go to a monthly and a yearly subscription soon. So, all right. That's all we got for this week. There you guys have it. YouTube, X, Discord, link in the description. Huge shout out to everybody on Discord. Community has been great. Also, huge shout out to Swiss Trader. He's a professional CANSLIM trader that's in our Discord. He shares a ton of great stuff. He was just on IBD Live, so if you can go on IBD Live and watch that whole episode from Friday. One of the most entertaining and also genuine traders out there. That's just real honest about his trading, and shows and proves that you can do this for a living and you can make money, because he's been doing this for decades as his sole source of income. So huge shout out to Swiss Trader. Definitely go check that out. And on YouTube, there's also a fireside chat we did in Discord, where a bunch of people are asking different questions. That was really fun, and there's a ton of great stuff in that talk. So click on the YouTube link and go into videos, and then look for, I think it's called Fireside Chat with Swizz. Other than that, that's all we got for this week. Appreciate everybody. Stay disciplined and have a good weekend.